Last week, Nvidia CEO Jensen Huang said he expects the AI boom will last well into the next year and made what could be the largest single bet yet in the tech sector to back up his optimism. The company's sales forecast on Wednesday of last week blew past Wall Street's expectations, and it said it would buy back another $25 billion of its shares, meaning the company thinks the shares are cheap and they have visibility through next year. A move most companies make when their leadership thinks the company is undervalued. All right. However, some think the company is overvalued. Now, if I blow up this daily chart, the reason why it sold off on earnings, because unlike the last earnings, the institutions were caught off guard. But since the last earnings, the institutions have gotten in before last week's earnings report. And so there were no more buyers. In addition, price hit this round hole psychological number of $500. So a pullback was somewhat inevitable. The earnings were priced for perfection. So the question is the stock overvalued? Let's get into this article before we continue with the analysis. It is coming from Yahoo Finance by way of Business Insider. Not everyone is hyping Nvidia's earnings. Here's why one analyst says the chip maker is ridiculously overvalued. So Nvidia blew out earnings report for the second quarter, has everyone on Wall Street seemingly sold on the limitless potential of the top chip maker. Some are even calling Nvidia the most important company in civilization. Nvidia is the stock market's new Tesla, where the market blindly assigns a ridiculous high and unrealistic valuation, Trainer said in a statement on Thursday. Now, Trainer, he's the CEO of research firm New Constructs. We are not denying that Nvidia is a great company, but we are pointing out that its valuation is beyond lofty and unjustifiable. His comments follow the chip maker's second quarter results, in which it said it pulled in a record $13.51 billion in revenue over the last 3 months. That's 20% above the expected $11.22 billion in revenue and 101% increase from revenue recorded last year. But the results from the last quarter aren't enough to justify the billions of Nvidia has tacked on in market cap, Trainer said. Given its current price, the company will need to grow its revenue by another 20% a year over the next quarter century. A tough prospect even in the face of booming AI demand. It makes absolutely no sense to be buying shares of Nvidia at its current valuation, Trainer said. Nvidia's ridiculously valuation achieved over such a short period of time reminds us that fear of missing out is alive and well, and that it is a dangerous phenomenon for investors that never ends well. So that's Trainer's perspective. Let's listen in to the Dean of Valuation as he thinks Nvidia is worth $240.
Joining us now, Aswath Damodaran, NYU Stern School of Business Professor of Finance. We like to call him the Dean of Valuation. Aswath, what is Nvidia worth?
Now, my estimate, it's worth about $240 a share. But let's start with the good news. This is an amazing company. It's a company that's managed to find markets just ahead of growth and kind of dominate those markets. Gaming, crypto, AI. At this stage, you've got to view them as an opportunistic company, a company that manages to do this over and over again. It's not just lucky. That's the good news. The bad news is when you're pricing Nvidia at $450, $500 per share, you're not just assuming that they will dominate the AI market, even if it's a big market, but there are other markets out there that we don't even know about yet that Nvidia will find a way to dominate. Could that happen? Yes, but I'm not going to pay upfront a premium price on the assumption that they will find markets that are undiscovered and dominate them.
At the same time, though, you're not selling all your Nvidia stock, right?
No. And I think that reflects the mixed feelings I have about the company. I was lucky enough to get in at the right price. It's made me more than enough money for me to view it as a great investment. But at the same time, there is enough of a tail on the distribution, a chance that they will pull off this, with this exceptional drop that might make them worth 600 or 700. I wouldn't buy them at today's price, but to the extent that you bought them a way back at the right price, and if you have them in your portfolio, I wouldn't argue with you if you said, I'm going to let the stock run.
So that's an important distinction, right? Because I've been bringing up earlier this week Apple more than 10 years ago when people were saying, hey, this doesn't pencil out. Here's how many iPods they would have to sell, how much they'd have to dominate the digital music market for them to be worth, and not just digital music, all music, for them to be worth this much. Yeah. I mean, they didn't see the iPhone coming. Nvidia is in a similarly unique position to become a game-changing tech player. And if you believe they could do that, then it's worth more than this, right?
It's already a game-changing tech player. They don't have to wait to get there. $1 trillion is a special number, and they've become pretty close to $1 trillion company. I think the question is whether they can take the success they've had over the last decade of being in the right place at the right time and continue to play it out on other markets in the future. There's a chance they can do it, and I think that's why I'm holding on to half of my holding. But I think also you've raised the ante. Now others are aware of the payoff for being in that right place at the right time. So the question is, can they keep off the AMDs, the Intels, and the other players who are going to try to come after them over the next decade? Because the game's just starting.
Okay. What was the number you gave? 210 a share? Was that what you said?
240.
240. Okay, I guess that's better. So, but even 240 a share, that's like down almost 50% from here. So that's my challenge. I understand you say you wouldn't buy it here, but you seem to be saying even if it went down to 300 a share, people shouldn't buy it. Like, okay, you're good. You've had it for a long time. You're in the money. But what kinds of calculations can or should an investor who doesn't feel like they have enough Nvidia use to justify buying it before it gets down to 240?
No, that's a good question. I think it really depends on how you see the AI craze playing out and how dominant you think Nvidia will be in that space. The larger the potential AI market and the more likely it is that Nvidia will dominate the market, the higher the number becomes. 240 becomes 280, becomes 320. And I think that's a judgment you've got to make. But this is a stock that's had near-death experiences. I mean, sometimes companies, investors look at companies like Nvidia and say, I could never buy a stock like this. It's so richly priced. I mean, this stock was $30 6 years ago. So, and it's had near-death experiences. It's dropped 50, 60, 80%. These are companies where if the momentum shifts, you can very quickly see a route in the other direction. You've seen this on Tesla. And I think you could see this in Nvidia as well. So if you haven't been lucky enough to add Nvidia yet, I think that there will be a point somewhere in the next year or two when fear is greatest. You will not feel comfortable buying Nvidia at 150 because everybody's going to be fleeing. These same equity research analysts who put out buy recommendations with the stock it's 470 are quick to put out sell recommendations with the stock it's 150, which makes you wonder why bother with equity research in the first place. You will be buying in a moment of fear, but I think there will be moments with NVIDIA where it'll become a good investment again.
Now, whether you think NVIDIA is overvalued, undervalued, price per perfection, fair value, well, let the charts be your speedometer. Now, if I scroll out to the monthly chart, you see this massive increase in price with the origin starting in October of last year, right? So pullback is inevitable. Question is, how far is it going to pull back? Ideally, a pullback from the $500 level to the most recent highs would be about a 30% pullback. I don't see that happening. That would be bear market plus. So what's reasonable? Can we see a 20% pullback, which would be what would be more of a bear market? It's possible. If we see another leg down going into September, October, we could see price fall back to this Wilkie buyers level at 380. Now, for me, this would be the ideal buying area, as this is where liquidity is waiting for price to see if price can pull back this far. But if that doesn't happen, this was an aggressive move during the pullback to go long at the most recent highs, as price did not fill that gap until Friday. Now you also have another gap that needs to be filled. All gaps get filled at one point or another, and that's going to be at the 433 level. Now you can see Friday's close. It did close above the lows. That's a good sign, but it's somewhat of a doji candle, meaning price was in couldn't decide who wanted to take control, the bulls or the bears. For me, this is the golden level. You have the 100-day moving average coming into the zone right now, but we're looking at another $80 sell-off. Is that possible? Well, in the last 2 days, we got a $40 sell-off. So anything's possible. It's really going to matter on what the broader markets are going to do, as 80% of a stock's move is tied to the broader market and the sector that it's in. So let's take this off. Another area of interest is going to be this other pivot high at the 440 level, which also served as support. But the 380 is the best level that I see on the charts to go long. Whether the price gets down that far, only time will tell. Thanks for watching. Subscribe. Please like the video.